Hi friends, welcome to today's video. Today's video is about PE ratio and its importance while investing in stock market. Welcome to my channel. My channel is centered towards sharing the information on financial concepts in short videos, so it may help you become a better investor. If you like the content, do subscribe the channel and like the video so it may help the other people to understand the financial concepts. So, what is PE ratio? In simple language, it is the current market price of a share divided by earning per share. So why it is important to understand the concept of PE ratio? Well, the basic principle of investing in the share market and earning profit is to buy shares at a low price and sell at a high price. But how do we determine whether a share is priced low or high? For this, one can use the PE ratio, where the P stands for price. For this, you can check the last traded price of a share, and E stands for earnings per share. It means the profit a company is generating divided by the number of shares. Let's try and understand it with a simple example. Let's assume there is a company called XYZ Limited. The company has a current market price of rupees 100. It is generating a profit of rupees 100,000. And the total number of shares is 20,000. So, we know the current market price of a share of XYZ Limited. That is rupees 100. However, we need to calculate the earning per share. We can do this by dividing the profit of rupees 100,000 with the number of shares, that is 20,000. By doing this, we will get the earning per share of rupees 5. Now, since we have both price and earning per share information, we can calculate the PE ratio by dividing the price of a share that is rupees 100 by earning per share of rupees 5. So the PE ratio for XYZ Limited will be 20. It simply means an investor need to invest rupees 20 in XYZ Limited to earn rupee 1. As a general rule, a share with a low PE ratio, something around 10, would imply that share is currently cheap, whereas share with a high PE ratio, say 50, would imply that share is currently expensive as compared to the profit it makes. Now, since we have understood the concept of PE ratio and how it can help one to understand whether a stock is priced low or high and accordingly take investment decision, it is also important to understand a few key points before making any investment decisions based on PE ratio. Number 1. PE ratio is really only useful when comparing companies within a same industry, as different companies will have different standards when comparing the PE ratio. Number 2. PE ratio should not be the only criteria used to evaluate the price of a share. There are certain other factors that should be considered while making an investment decision, such as year-on-year sales or quarter-on-quarter profit growth of a company, market capitalization, price comparison between current market price versus daily moving average price of share, future growth prospects of a company, etc. This brings us to the end of the video. Give a thumbs up if you liked the video and do subscribe to get a notification for upcoming videos. Goodbye and have a nice day.